Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of PayPal, ticker symbol PYPL. And so I went over this last Saturday and I just wanted to do a follow up, especially because we had a pretty exciting Friday going up 6%, just over 6% on the day, closing the week at a price of $65.82, having broken out of not only this orange falling wedge that I have drawn here, but also breaking above this yellow downtrending level of resistance that had previously acted as support over here and then resistance over here. So we are now trading above that. So I do think that is great. And so I just wanted to kind of go over where I see the stock going in the next 2.5 weeks. And why do I say 2.5 weeks? That is because earnings are going to be reported on February 7th, which is on a Wednesday. So 2 weeks plus a half a week on that Wednesday, that is when earnings will be. So where do I see the stock price going? And so before I get into where I see it going, I do just want to point out on the last video that I made, I had suggested that this bull flag that was here, I did think that this little baby shoulder that I referred to it as could be kind of a fake out shoulder, like we saw this little blip here, and that the shoulder wasn't completely formed. And we actually did get a breakdown of that for the first two trading days of the week, which was Tuesday and Wednesday. It was a shortened week. And we did get a retest of this red dashed line that I have drawn at $57.29. Looks like that was on January 17th, hitting a low on the day of $56.47. And, that is, corresponding with the top of this channel, the top of the shoulder or inverse shoulder, I guess the bottom of the shoulder over here that was hit on August 18th. And so with that, we did get three candles, green candles, following that, going up nearly 2.5% on the 17th, over 3.5% on the 18th, and then breaking out of that wedge and breaking above that yellow level of resistance, going up nearly 4% on Friday. Going up nearly or just over 6% on Friday, like I had said, going up nearly $4 on the day. And so, we can see here that it does look like there's this big volume shelf here that price is currently trading above. Also did continue to go up in the after hours. So hopefully we do see a continuation into Monday of next week. And so, like I had mentioned in the last video, if this is to actually be an inverted head and shoulders or inverse head and shoulders pattern, and we did get a breakout, we could be seeing a measured move that would be bringing the price up from the low here to the high here of around $14 based on that neckline. And that would be bringing price up to around $76, as I had gone over in the last video. So what I could see happening over the next 2.5 weeks is a continuation. Well, I guess I should say, before I say that, I could see two scenarios. One I think is actually more bullish than the other, and the other one is perhaps not. And that scenario that I feel is less bullish is that we do see a continuation higher to fill the gap at $72.50 and then continue to around $76 or $76.50. If we do see that over the next 2.5 weeks, I would think that following earnings, price will tank. So I don't think that's actually the best scenario. What I feel would be the best scenario for the stock is for price to retrace to the scene of the crime, as Gareth Soloway refers to it as, which is the breakout of these two levels, retracing to that, confirming the breakout, retesting them as support now that we have broken above the resistance. So retest those as support perhaps over the course of next week, and then start to move higher. And that would tell me there's not really that much left behind us other than these two gaps. And so that price could continue higher to perhaps blow past $76. And maybe, let's see, getting to, this next level of resistance, this next volume shelf around $83. So, we'll have to see where price takes us next week. But I do think a pullback to retest right around $60 would be really good for the stock. And on that note, before I forget, I do want to point out let's see, max pain for next week, January 26th, is $59. So that does suggest we might be seeing a pullback. However, we did see this breakout. And so we could also start to see a gamma squeeze if max pain does remain around this level and price keeps going higher. Also, I do want to note the following week, the max pain, that did not stay on the second. The following max pain is again $59. And then if we look at the one after that, which is 2 days after earnings, $60 max pain. So if we do see prices continue to go higher, I do think we'll start to see a gamma squeeze and prices really start to push up higher. And but I do think that it would be more sustainable if we do get a retracement to around $60 before really continuing higher, leaving these gaps behind us. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. Take care.